It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Thursday evening, July 7th, 2016. Markets are once again giving us excellent opportunities today ahead of tomorrow's non-farm Friday trading session. Crude oil and euro are bearish, while the S&P and gold are bullish ahead of the major news scheduled to be released at 8:30 a.m. Eastern Time tomorrow. We have a very important newsletter in store for you guys. Big opportunities ahead of news tomorrow. We get a plan. We get the schedule for tomorrow. Before we jump into our charts, though, I do want to remind you the only place to watch this full-length version of the newsletter is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, don't forget there's a link in the description of the YouTube video. Follow that link. Come over here and join me on the blog at Sideways Markets. And while you're here watching the full-length version, don't forget to grab a free pass in the upper left-hand corner. Come out and join me in the trade room next week as a guest. Free pass for you in the upper left-hand corner. Also, don't forget to register for the mailing list. I'll send you an email every evening when the nightly newsletter goes live. Also, below the video tonight, you can download all the charts you see me using in tonight's video. How easy is that? Follow that link and have those charts ready for your day tomorrow. And of course, as I always remind you, you're going to learn more with me in 1 week on my free trial than you will anywhere else. Register for the free trial on the right-hand side of the website. And you know I'm always here to help if you have any questions. There's a live support button right on the right side of the blog. You guys ready to rock and roll? I hope you're hydrated. We get a busy one here tonight. We got some major news to talk about, and of course we'll jump into the charts. First of all, looking at tomorrow's schedule for Friday, July the 8th, we have nothing coming out of Asia or Australia tonight. Not that it would really matter much because tomorrow's non-farm Friday, but just in case you're curious, there is no major news coming from our friends in the Far East this evening. Tomorrow morning, though, we do have Friday, July 8th. Don't forget, end of the week. Always times when we see larger volatility, right? So remember, Fridays are always going to be an early in, early out. Friday's always the same, right? Get in early, make that money, get out early. You don't want to be hanging around late in the day on Friday because traders tend to take bigger risks. Volume drops, volatility increases. It's a recipe for disaster if you're a new trader. We'll talk more about that tomorrow with all of our students. Most important thing tomorrow is, drum roll. All right, that was enough. Drum roll, U.S. employment situation. That's our non-farm payroll number tomorrow morning at 8:30 a.m. That's going to be the most important news number of the day tomorrow. Everything else is secondary to it, and you can see there pretty much isn't much else tomorrow on the schedule. A word about tomorrow. There are really two major news events that have long-lasting implications. No, I'm not talking about Brexit right now. I'm talking about non-farm payrolls. That's one of them. And I'm talking about the FOMC announcement. That's the other. This is one of those big news reports that analysts will be watching closely. They've already led up to it now, and this will have big implications into what happens on most traders' desks tomorrow, Monday, Tuesday, and Wednesday next week. This is a big deal. This is a big deal. What this means to you is that we're going to see lower volume leading into the news number tomorrow morning, and then excessive volatility, which means low liquidity tomorrow as the news comes out. This is very similar to any other major news report. Careful before it comes out. Expect volume to be light. Major fund managers, major hedgers, proprietary traders freaking big accounts, they're not going to be holding positions into this news because the liquidity aspect is so illiquid the minute that news comes out that no professionals are going to want to step in front of that freight train. So careful tomorrow before the news comes out. And then I always recommend play it by ear, but usually it's going to be between 10 and 15 minutes after the news comes out tomorrow before we'll start getting some consistency in the price action. The unfortunate part is that there's no way of telling what the reaction is going to be tomorrow. Okay, I'm not gonna waste your time by looking at projections. It doesn't matter. All that matters is what we see on the chart tomorrow morning at around 8:35 a.m. Eastern Time. So careful before, careful afterwards. In my experience, non-farm payrolls usually either go bonkers or we get a very small reaction and it kind of sits for a while. If it's too volatile, don't try to wrestle that crazy animal. Give it 10 to 15 minutes. I'll be here with all of our students in the trade room tomorrow morning at 8 a.m. Eastern Time. We'll do it all together. but usually it's either too fast or too slow. Wait for it to settle in, find its direction, and then you'll be off to the races tomorrow. And again, don't push it too late tomorrow. Oftentimes towards the end of a Friday session, right, 11 o'clock, 11:15, 11:30, the market's still moving, but it barely has much volume to it. And so be careful tomorrow because, again, end of the week, end of the month, end of the quarter, this is when times get tough for new traders because there's no liquidity in the market and traders take bigger risks. So careful out there tomorrow. Also, one more thing here, and I promise we'll jump into charts here. Keep in mind, this is always a difficult thing for me to anticipate the next day. I'm going to talk about trends, some situations we're looking for tomorrow. They are situations where we need to see proof after this news number comes out. Promise me. I'm looking at you. Yes, promise me you will not buy into a runaway bear market tomorrow. You will not sell into a runaway bull market. All right, I'm going to talk about trends that I see happening right now, situations that we're anticipating for tomorrow. But I don't want to get any of those emails tomorrow afternoon saying, you said to buy. No, I said be careful after this news comes out. All right, use common sense. Don't try to fade a runaway market in either direction. And again, if you don't know how to define when those conditions are too dangerous to be trading tomorrow, you need some education. I look forward to seeing you in our trade room here with all the rest of our students at School of Trade. All right, guys? Hopefully I cautioned you enough. Hopefully I scared you a little bit tomorrow because trust me, okay, there are graveyards filled with trade accounts that try to trade news events, all right? And tomorrow is one of those days. Do not sell into bull markets or buy into bear markets. I don't care how strong the support of resistance looks. This is employment news we're talking about. It is typically a market mover. Now, again, it's either going to be real slow or real fast afterwards. We'll have to play it by ear and see how we do. And then, of course, we'll jump into some trades after the news comes out tomorrow morning. Also, if we got anybody that wants to come back on Sunday night, don't forget Sunday evening. Always a nice little treat to start the week. Sunday evening, got some big news coming from our good friends in China. Be aware of that if anybody wants to be at their desks late in the evening on Sunday. We'll talk more about that in Monday night's newsletter. All right, looking forward to another good newsletter for you guys. Boy, oh boy, I'm going to go with bearish. I'm going to go with bearish on this one. I'm not the sharpest knife in the box, but I'm going to go with bearish on this one. Crude is bearish after today's inventory report sent prices back to new monthly lows. But the bulls will be waiting for their chance tomorrow to send this price higher. Don't count those bulls out yet. The day started with the bulls in control, right? In fact, in our trading this morning, we were doing nothing but buying. The bulls had control at the beginning until that darn inventory report sent prices tumbling to new monthly lows shortly after 11 a.m. Eastern time. The market is clearly bearish this evening with a strong move down to complete that double down target around $45 a barrel with a pending bear channel and a triangle to work with tomorrow. The most important thing to remember tomorrow will be that the sellers have control and we cannot start thinking about buying until we see the bulls make a new higher high and hold the pullback tomorrow. That's the most important thing that I can remind you right now. I don't want to hear all of that. Well, it can't keep going lower. Yes, it can, and it will go lower if it wants to. We have to wait for proof before we start looking to buy the lows here. We have to assume that swing sellers will be waiting above all the resistance levels above with the goal of loading up a big position and going back down to retest the lows again tomorrow and possibly down to that triple measured move around $44 a barrel. If prices rise, the sellers will look for buyer failures to sell back down to those lows. Keep it in mind. If the price pushes lower, the bears need to be careful not to sell low and wait for proof that buyers aren't waiting at the lows for an easy trap to send prices higher. The bulls need to get a successful breakout pullback, and if they can hold, they have wide open space back to that battle zone up around $47 a barrel. We don't see this stuff very often. Over the past few months, it's been relatively congested. This is wide open space, and so this definitely opens up some big opportunities for both the bulls and the bears tomorrow. Let's play both sides of this. What if price goes higher? What if price goes lower? Obviously, we have the market completely in runaway mode. That means, of course, now we've got the bear channel. There's a pending bear channel here that will act as resistance. Just keep it in mind. I'm not too confident about that channel. It's not a very, well, there just isn't much proof yet of rotation. And if you're a student of mine, you know exactly what I'm referring to. What I like a lot more, though, is this spike in channel. That spike in channel really fits well, but the spike in channel already has a break and retest and goes into that bear triangle. Keep it in mind. Right, those are the main structural clues. The big deal here right now is the sellers have got their target, right? They got their objective. They got the measured move. They got the double down, right? When they blow through the measured move, they're usually going to the double down, right? They try to hold a pullback and send the price lower to the triple measured move, but they appear to be stalling out. This stalling out should be at no surprise, right? I'm sure the sellers need a bit of a breather right now. Pretty active afternoon session after this thing collapsed after inventories. So, as price goes higher, we assume buyer failure will be greeted with sellers. As this price goes higher, if the buyers can't hold the pullback, sellers will be looking for this price now to tumble back down to those lows. As this price goes higher, sellers will be looking to reload the gun and come back down. But as you can see, though, there's a lot of open space there, which definitely gives the bulls a very big opportunity if they get the proof tomorrow. What will the proof look like? First of all, look at the triangle. Breakout pullback. Just be careful, that measured move will act as resistance overhead at 45.56. Again, really, you can't even start thinking about this as a bull market until it can get a new higher high, hold that pullback, and go. Maybe it's a triangle. Maybe it's the measured move area, which is resistance, which may be acting as support, right? Get above, breakout, pullback. The reality is target for the bulls right now, if I had to guess right now, 46.56, 46.96. Obviously, it's very difficult for me to tell. That's the battle zone. I was about 50% of the way back up that high. And then really the ultimate target for those bulls is the correction zone from that spike in channel. If you're with me earlier this week, we did a tutorial on spike in channels. And so you know that's a big old correction zone. So look for the buyers, hold a pullback, and then potentially just jump on this thing tomorrow. You know, again, I don't want to anticipate the news very much, but if we get a nice shot in the arm from the jobs report tomorrow, demand increases, going back to, again, these are some of the things that may happen tomorrow. We got to wait for the news to come out, but I can easily see how buyers could light a fuse after this big drop down. We're also just below the monthly low right now. If you look at a prior month low, we're just below that monthly low. So this is definitely potential where you've got long-term bulls that are defending big positions to send this price back up if you look on a slower time frame chart. And if I dare even mention a daily chart, we have a measured move down on the daily chart right now. Although it's not important for day traders, we're going to wait for proof either way. But there is quite a bit of support sitting down here. Again, it doesn't matter how much support's here right now. I want to make sure we get that right clear right away. I don't care what support's here on the daily chart. I don't care if there's a monthly low right there. The reality is this is a bear market, so wait for proof, breakout pullback above those highs. It's difficult to tell where it's going to pull back to. You know, it's difficult. The high of that bear channel, that'll make a great spot for support. The high of that triangle, that'll make an excellent spot for support. The measured move, that'll make an excellent spot for support. We just got to get something to sink our teeth into. Really what we have to do is give the sellers a reason to back off and give us some breathing room, at least up until that 46.15, right? And of course, the battle zone overhead. What if price goes lower? If price goes lower, I'm thinking there are tons of traps waiting here for sellers. I'll tell you one thing I would not recommend you do, not only tomorrow, but anytime you see something like this. When there's a big move down like this, you have to assume there are professionals who have their orders sitting right here to buy, and if it goes lower, they'll buy more, and they'll buy more, and they'll buy more. Put yourself in the shoes of somebody who has a significantly large account and 30 years experience. They're going to call that bluff all day long. And so what you don't want to do is you don't want to sell into that low. You know what I always recommend, right? Pull the okie doke on them. Expect those buyers to be there. Wait for them to try to buy, right? They'll try to buy that pullback and then sell it, right? It's a breakout pullback. What it will do is it break down, pull back. don't just sell that one. That's going to be the one that will fail. It'll fail and go back up in. Wait for the buyers who are undoubtedly going to try to find their little Fibonacci support area there, right? Wait for them to fail and sell into it. Very